Welcome to another Uncommon Man podcast. Today we have with us a special treat. We've got Ryan Baird he's a third generation Silicon Valley native and has an unbelievable array of experiences from startups, VC information to hedge fund managing and his own companies as well. And welcome, Ryan. Awesome to have you here, mate. Thanks for your time. Thanks for coming along.
Thanks for having me. It's good to be here.
Would you you've just set up a big event, just finished there, you're one of the speakers there as well. Can you tell us a little bit about it? What was going on? What was it about? And I guess what you were presenting as well.
Yeah. So we started hosting events back in 2009. And at first, they were just little get togethers at my apartment. But over the years, we've refined them to become bigger and bigger. And at the end of the day, they're essentially a showcase for family offices. And what we do is we curate fundable founders for them, and we get one of those fundable founders investors to talk about why they invested. And that way, family offices not only hear from the founder, but they also get to hear from one of the investors. And we have found that this helps them get through due diligence a lot quicker. And most people go to conferences, and the event organizer's business model is tickets and sponsorships. And that leads to a very specific kind of event. And we like to keep our events much more curated, and it's largely because we have a completely different business model. Our business model is success fees. So we don't need someone to pay us 10 grand to jump on stage and speak. We need someone who can jump on stage and raise hundreds of millions of dollars, if not billions of dollars in investment or debt.
For those guys listening, when you say family office, because lots I know the guys down in my end of the world won't understand what a family office is.
Yeah, so over the years, the number has gone up. When I was coming out of college, it was $50 million of investable assets. Now I think it's closer to 100.
Okay. So that's one family who owns up to $50 million. That's called a family office.
Yeah, I think today it's more like being a centimillionaire, $100 million, and you're running a family office. I think below that, you can pretty much do what you're doing by yourself, but you do reach a certain threshold where it makes sense to get experts to be running the family office full time. So if you talk to an investment bank, they'll tell you they're the solution. If you talk to a multifamily office, they'll tell you they're the solution. So it really kind of just depends on what you're looking for. They all come with very interesting networks attached to them. And we just do our events so that we could show family offices what other family offices are investing in, and then they can learn why they're making those investments. And it's not just venture and startups. We had private equity funds, hedge funds, private credit funds. We had crypto funds. We really like to show people a large gambit of just tier one deal flow, and they can make their own decision if they want to ever invest or to get more information. We really do this so that people can just learn more about the alternative asset classes and show them what above average deal flow looks like.
And so was it a success? How did the event go?
It was a huge success. We've already
Awesome.
heard of $150 million being invested. So that's really exciting. We had over $50 billion in net worth at the event. We had Steve Hilton come through, which is the most relevant candidate for governor uh, that we had confirmed. and we had a number of great founders that are doing just absolutely incredible things speak. We had Dan Springer, who took DocuSign public, speak. I mean, I can go on for quite a long time and talk about all the amazing people we had speak. But at the end of the day, we're trying to curate a group for centimillionaires and billionaires from an investment point of view. We had philanthropy, we had investments, opportunities, and we just hope we can continue to do this and help family offices find above average investments.
Was there a key thing that stood out for you or something that you learned or, that you didn't expect to learn as the event went on?
Mm, I guess what I learned from the event was all the different sports opportunities that are available there. This is the first time we ventured into the sporting
Mhm.
space, and we had the father and son duo of Guy and Bruce Stimson from the Stimson Group. And, they are fresh off of the huge success of selling one of these soccer teams for $1 billion. And I'm really excited to be learning more about the ones in the hundreds of millions of dollars. But there's some community teams that are only 4, 5, $8 million, and I think that's pretty cool that people can own different parts of these leagues and hopefully build the team up and build some value in there
That's cool.
and either hold on to it forever and just enjoy doing it or eventually flipping it when your team is really, really good.
That's awesome, mate. That I imagine that's a bit of a fun play, especially I guess if you were interested in the sport as well. That or you, I imagine it invites interest into the sport once you've invested in a team, and you're like, oh, I'm going to learn more about this. So that's neat. Can you share a little bit about what life is like for you from a personal experience, family experience, and a business experience, 3 generations deep in the Silicon Valley? Can you give us a bit of an idea for that?
Big question.
Yeah.
Is there something,
What
um
what what was it like growing up in what is, the tech capital of the world, the startup capital of the world, all these things that come out that, that we use on a daily basis. Massive companies, massive growth, massive tech. What was that like as a young guy before you got into business? What was it like?
Yeah, I think I'm just hyper aware of the world from a young age. I was following Hewlett Packard in the newspaper when I was a little kid, and I would watch the price bounce around. So, I would understand why there would be a big move here or there, and got to ask questions being super young to start understanding the world of business, market cycles, how interest rates really drive most of what is happening, not just in the US, but globally. And I got to try different businesses and see which ones would make me the most amount of money as quickly as possible. And I did lawn mowing businesses, painting addresses on the sidewalk, moving businesses, you know, selling CDs to my friends and then having my friends sell CDs to their friends. I tried all kinds of different businesses, and I think that gave me a very unique perspective on the world because I was actually testing ideas out and seeing what worked. And that framework has always helped me when I've, run up into new challenges. And I like to just work my way through it at the end of the day, you're competing against somebody. You're always competing against yourself. And I think being in Silicon Valley, we get to hear about the huge wins and all of the failures. Not everyone's crushing it in Silicon Valley. There's lots of companies that are crashing and burning on a regular basis. There's lots of startups that see a gap in the market and they start building it. They raise money. Now they're worth $100 million. And then a big company goes, oh, we can build that over the weekend. And then they start attracting customers. And the startups either offer something unique or the big company just wins. And maybe if they're lucky, they'll get an acquihire. But
That's yeah,
I
that's
think being
interesting.
in Silicon Valley and seeing both wins and losses from multiple investors' point of views in multiple asset classes for multiple reasons, I think that helps you just really appreciate risk. And I think that's always helped me in my own endeavors. And it's something that I think people should really spend time thinking about. What is the biggest risk of your life? And if you can reduce these risks, you should do it. And a lot of times it's just removing a few barriers that helps people unlock new streams of income
I
or
love that.
entirely new businesses.
I love that. Can you share some insights on how you have mitigated risk in your life? And either from a mindset point of view, from a logical, statistical point of view, how have you gone about it to unlock greater potential in both yourself as a person, but also your ability to make money and, get to where you are now?
Yeah, it's a big question. I mean, I call our investment group Focus on Risk. It's a big part of my life. It's a big philosophy that I've always tried to use and try to teach to other people. And I think a lot of it is just really being honest with yourself. And I've noticed when I would help other traders or investors, and sometimes when I'll help CEOs, they want to talk about what they're going to do when they're a unicorn, what Lambo they're going to buy, all these things when they make all this money. And to me, it's always been a really counterproductive conversation when you really could be talking about what are the biggest risks to your business and talk about how you can remove those risks. Because if you can remove those risks, the other side of the hill is success. And that's why I think people really should spend a good amount of time thinking about the different risks in their lives and what's probable, what's not probable. And I think this would remove a lot of anxiety from people's lives because they could be really hyper aware of what's preventing them from getting to the finish line and get there if they work hard.
There's something that I've really noticed about you, and I'm interested in your experience through life. You seem very steady. It seems, there's not a massive high, which doesn't mean there's a massive low. And I imagine through obviously you're managing billions of dollars, you're investing billions of dollars, you're managing other people's monies. There's an element of external pressure on you. How have you were you always this way? Were you always just very level-headed, kind of, "Oh, there's the risk, there's the upside, there's the downside, and I'll just do what I do," or has that been learnt experience?
I mean, I try to be as logical as humanly possible and think from first principles so that we're focusing on the right problem and we're thinking about the right things. So I think I've tried so many things that I have figured out what works and what doesn't work. And, whenever we do a big project, I'm always, you know, thinking at the end of the project, okay, what went well? What didn't go well? What can we do next time to make it better? What would take it from average to elite? And if you can pinpoint these little things, they add up over time and people will feel the difference. People feel the difference between an average event and a special event. People feel the difference when there's $1 trillion in the room, assets under management, and when there's no money in the room, under management. People feel the difference when there's billionaires and famous people in the room. There's an energy. Just like when you go to a concert and people start screaming when they see the artist. We have those types of people, but in tech.
It's the tech world, yeah. I guess throughout life, looking back, and I know hindsight can be one hell of a son of a gun sometimes, but has there been moments where you've been like, that was a key learning for me, and that has enabled me to have a greater understanding and a much greater range of risk management? And how has that then impacted business going forward?
Oh man, all these times that I was wrong about a certain thesis or hypothesis, and that really has opened my eyes. And, I thought I knew everything about finance when I was younger and everything about risk because I read all the books and I was putting in the work. But you just have to go through some life experiences to learn to get to the next level. At least for me, some guys just come out the chute and crush it on everything and they're billionaires before they're 30. I've had my ups and downs. We've had big successes, but in my opinion, we haven't done anything that has really got us over the hill where we're going IPO.
I really enjoy that about you because when we had a catch up when we first connected, your resume is huge. And, going to one of the top traders in Chicago, we discussed the whole idea of, you weren't you weren't in the sort of network of the Harvard boys, we'll call them, in the boys club. You really worked your way up and became one of the top traders in. Well, you got moved to Chicago, didn't you? You moved to Chicago and
I
then
was
became one of
living
the
in
top traders.
I was living in San Francisco, but I would go to Chicago once a quarter to train the other traders on what I was doing, how I was trading, how I was managing risk, how I was tracking my trading and thinking about how I tracked my trading, I think was what a lot of them were missing because if you're really into something, you're going to look at it from every which way. And if you just listen to the teacher and, okay, I'm going to do ABC, then you become an average student. You can take instructions and you can execute on them. But if you're competing, you want to figure out how you can do better than everyone else that you're competing against. And if everyone's reading the book and doing ABC, I mean, that's the baseline. That's the bare minimum that you need to do is get good grades
Yeah,
and
yeah.
just let it open up the doors that it's going to open up for you. And I think when you're hyper competitive, you're always looking for ways to find edge. When you're investing, you're trying to find alpha, but you got to realize what everyone else is doing. And this is my knock on VC. I feel like they don't realize what hedge funds in technology are doing. They are absolutely crushing it. And these VCs run around and they complain that they can't raise money from LPs. And to me, it's entirely obvious. You can invest in a hedge fund, take less risk than venture capital, and get equal to greater returns. So,
I I would love it if you could you shared such a great insight for VC. And I definitely see that how your model of the world works because you have such a spherical picture of something rather than just very one-sided. But people look at VC or they hear VC or they hear about Silicon Valley and it's like, oh man, everybody's, you invest in three things, one blows up and off you go and you're absolutely killing it. You shared some really awesome insights with VCs versus the hedge fund. Can you give our men some insights about that and what you see that other people don't?
Well, I think what a lot of people don't realize is venture capital is the smallest asset class. And you got to ask yourself, why is that? And, if you look at venture capital, they're investing in companies extremely early. And if they have no revenue or very little traction, the people that are investing in these types of companies, they're taking enormous risk. It's very similar to investing in small publicly traded penny stocks that are $50 million in valuation, right? So, you know, VCs ask hedge fund managers to be LPs in the venture fund. Hedge fund managers don't ask VCs to be LPs because they generally don't have that much money. I mean, the richest VCs made $1 billion starting their own company, and now they're using their own money and some of their friends' money and LPs that they've met along the way to invest. All these other VCs that haven't had a big exit, they're not that wealthy generally because they haven't made a bunch of money from taking companies public or much successes themselves. There's obviously oh god.
Yeah, go ahead.
There's obviously exceptions to the rule, but from my experience, I've met many, many more VCs that go out of business versus VCs that stay in the game and they keep doing it year over year. And we host events for investors, so we get to see these investors. And we started doing events in 2009. And I can tell you right now, there's hedge fund managers, private equity managers, commercial real estate managers that have been doing this forever, for decades. And there's a lot of VCs that come in, they try to do their thing, they make a bunch of bets, and then they don't catch the lucky lotto ticket. And then they start a fund of funds, or they go home and they become the Silicon Valley expert where they grew up, or they go do something else. I mean, it really just depends, but it's a very volatile asset class because there's so many funds going out of business. And then those people need to figure out what to do next in their lives.
That's wild. That's wild. I can see using your brain, that risk aspect just takes you down a different path. I'd love for you to share because it was such a cool insight that you shared with me when you showed me your map of the world. You've got this brilliant ability to look at things from all sides and risk mitigate. But then through your trading journey, you shared how everybody was kind of going across 150 stocks or 150 kind of options for investing. Why did you do something different? And can you explain what you did differently? And what was the thinking like? How did you come up with that?
Yeah, so actually my mentor, he looked at the options world and said, wow, all these guys are doing 150 names. I'm going to do 10 to 15 names. and he did very, very well for himself. And then he wanted to expand. So he was teaching other people to do 10 to 15 names while all the other people were doing 100 to 150 names. And I came in and I learned how to do the 10 to 15 names, and I reviewed my trades at a much more in-depth level than other people were doing. Other people were literally just listening to how we were getting trained and recording the trading based on those initial instructions.
They were doing the ABC.
Exactly. But I really put in the work to try to find other areas that I could potentially find some alpha or some edge or some other way to compete and just get a little bit better than other people and hopefully have all of these edges add up to a big competitive advantage. So I don't know where I was going with this, but
Well, how did that then bring you into that model then you've taken into your world of getting funds, but also focusing on where you're investing? And so you shared with me is lots of people are going for, they're trying to get 10, $100 million contracts. And it's a lot of work and the ability to go deep. They're going wide, not deep. And you're picking one or two, but you're going for the $1 billion contracts. What, firstly, like, why did you think you could do that? Like, why are you like, okay, why not focus on the 10? Why not think you're that person? How did you get to the thought pattern of, no, I'm going to be the person that goes for the one or two and just go for the big ones?
yeah, that's a great question. So I think one of the biggest risks that people don't talk about more often is opportunity risk. So, sure, can you go down this path and make $1 million relatively easily? Yes, you can. Okay, so should you do it? Well, I don't know. What's the other paths? Maybe I
Right.
go down the
Okay.
other path and I'm making $1 million a day. So you really got to look at the various options that are in front of you, and you need to pick the opportunity that gives you the highest expected value. And I would argue that because people don't understand risk at a high enough level, they take this path that is given to them. And sure, they do okay. I'm sure they're doing fine, but there's a lot of other paths. And these other paths you can do in parallel with a career. You just need to understand them so that you can take advantage of them. And I would also argue that knowing these other paths are now putting you in the same circles with people that are also going to be making a bunch of money in the future. And people like to make money with people that they enjoy spending time with. And it's just important for people to be more numerate. We've done a great job making people literate. We need more people to be numerate. Been screaming about this my entire life. It feels like we've gotten nowhere, but hopefully, as we continue to scale our business, we'll be able to help more and more people become numerate. And I hope that answered your
It does.
question.
I see it on a micro level of just people in their own business. They have like 6 things trying to go on at any one time. And because of the inability to be able to understand the opportunity cost, the risk, the learning that it might take, they don't have a formula or a model of how to make that decision. So they end up just trying to do a bunch of stuff and never really getting anywhere. Is that your experience, or do you see that a lot with people?
I see that all the time, and this is the trap of working on small deals.
Right.
I think I might have mentioned this previously, but
Mm.
when I was in college, many people fell for this trap, and every single year since, people continue to fall for the trap. And it goes a little something like this. Maybe they graduate college, they get a great job at a tech company, and they're selling 5 to $10 million worth of software. Or maybe they're going into commercial real estate and they're selling a $5 million building and a $10 million building. Or maybe they go into lower middle market investment banking. They're helping a company raise 5 million over here. They're helping another company raise 10, $15 million over here. Maybe they do an acquisition for 50 million. All of these deals sound like big deals. So people graduate and they flock to these types of jobs, and they do sound like big deals to the untrained ear. But people that understand the space deeply, they're much more interested in doing larger deals. We're in investment banking, or you're in commercial real estate, or you're in tech sales. I mean, everyone has read the same books. Everyone in investment banking's passed the same exams. We all are pretty much the same, yet some people make six figures a year and others make 7 to 8 figures a year. What's the difference? It's most people falling for the trap of working on small deals. The people that are working on big deals, most people think that they're just good looking, or they're a sales killer, or they're really good at golf. And I find that not to be true at all. I think
You
the
find them all
biggest
terrible at golf.
difference I think the biggest difference between people making six figures and people making 7 to 8 figures is how well they communicate. If you can communicate at an elite level, you're going to be working on big deals and closing deals that are tens of billions of dollars. And if you're just making 1% of that, you can see how powerful communication becomes. Here's somebody that has read the same books and taken the same exams and done the same thing as a bunch of other investment bankers, and yet they're making 8 figures a year, and these other investment bankers are making 6 figures a year. It just goes back to the trap of working on small deals. People need to have the confidence in themselves that they can work on the largest deals in the world, and that's what they really should be aspiring to do. Having aspirations to join an investment bank fall short on what they actually need in order to be successful. And I'm not saying you can only do it in investment banking, you can do it in other industries, but you should also have that focus of, I want to be working on the biggest deals in the company. I don't want to work on the average deals in the company, and God forbid the smallest ones.
You you mentioned communication. Do you think your ability to go deep and really understand one or two deals enables you to have a better level of communication because you have a deeper understanding?
I mean, I do consider myself more of a generalist than having a deep understanding of a lot of these other things. When it comes to derivatives, I consider myself an expert. I can talk to people at the highest level about it, but working in investment banking, I see deals across the alternative asset classes because we work with family offices. So I hear a lot about commercial real estate. I hear a lot about private equity. I hear a lot about hedge funds. I hear a lot about venture capital. And, I just don't feel like I'm an expert in any of them, but I am an expert in helping people allocate to them. And
Right.
that's how I help my clients. I can show them lots of different options, but showing them the ones that are going to help them reach their business objectives is really what we want to do to help them.
And do you see that when you've, because how many startups have you do you work with, or do you still work with any startups, or are you just purely focused on fund managing funds, doing the hedge fund work,
No,
that sort of thing?
we work with a lot of founders. We tend to work with founders that have already sold a company for 100 million plus. That's really where we like to sit.
Mhm,
Other times we're working with founders because they're a top 50 startup
mhm.
and we have demand that we're trying to fill. And other times we'll have founders that will advise and we'll help them raise capital. We'll help them get debt. We can help them, think through if they should do some kind of M&A or if they should do some kind of IPO or SPAC. So there's a lot of different ways that we can help our clients, and that's why we call our services corporate development as a service. We don't just limit ourselves to capital raising. I find a lot of times that companies want to do the capital raising. They don't have enough advisors, they don't have the right board members, they don't have enough media yet. So I like to just let them pause a little bit, get these key things that will lift their profile and help them reach their business objectives.
You teach them how to run the dog on Instagram, don't you? That's what you do. Y For those guys listening, Ryan's got a famous dog that blew up the Instagram world, so it's fantastic. So do you find you're doing a lot more mentoring these days and helping people with their thinking and understanding different models of how to develop their business?
I think we do a lot of advising,
Mhm.
specifically on capital raising, debt financing, strategy. So it's really wide because of the family offices we support. They're looking for deals across the board. And that's why we find ourselves involved in all of these crazy deals.
I would love to know what's something in your past that at the time felt like a pretty drastic failure, but now you can look back with a level of gratitude for it. And why is that the case now?
Well, when I stopped playing hockey, it felt like a huge failure. I had this dream of, playing in college, and I absolutely could have played in college, but it didn't work out for me, and it ended up being the best thing probably that could have happened to me because I retained that work ethic and I just applied it to entrepreneurship. And that's what I think really helped me succeed. And I was able to have a decent sized business while everyone else was still completing their school. I was very fortunate that in high school, I had this DECA class that allowed me to work on my business during the sixth period. And that was absolutely instrumental in having a business that I could operate through college. And I just feel very fortunate that I took that class.
That's such a great system. That is such a great system. Okay, I have an interesting question for you because many men talk to me and they're like, how do I find balance in my life? And I have my opinion of it, but I'd love to hear your opinion of what, especially in such an echelon of the world, an echelon of business, an echelon of wealth. What do you see as balance if it exists at all? How have you managed it in your life?
I mean, balance is extremely important, but what that balance is what people I think sometimes get wrong. You can work extraordinarily hard and outwork your competition. You just have to know what your competition's doing and what you can do to consistently outwork them. There's the time element in all of this that in the entrepreneurial world, I think a lot of founders don't realize how much effort it takes to actually have a successful business. So there's going to be times that the entrepreneur is going to be working every second that they're awake. And I think that's completely fine. Sometimes a business that's on the cusp of going out of business needs that kind of attention in order to get to the point where they hit break even. And then they start making a little bit of money and they start getting profitable. So if people want a better balance, they should work for someone who's already built a business. And now you can work, 50 to 60 hours a week. If you're in Silicon Valley, maybe a little bit more, but you're going to be paid fairly for your effort and you're going to have a successful life, but you're going to have taken less risk and you'll be compensated appropriately. If you want to take max risk and start a business, you just need to understand the risk that you're taking. And typically, the best entrepreneurs have a little secret or some kind of little edge that they get to use over and over and over again that their competition doesn't have. And those are the ones that win. I mean, anybody can look at a company, copy it, and pretend like they're running it. But you need to have the grit and the tenacity in order to actually build a business that lasts for decades. And oftentimes I hear founders, they think they want to get acquired because they just want to retire and their number's 10 million or whatever. I think the best founders want to build something that lasts for decades, if not centuries. And it's also, you can kind of hear the passion in these entrepreneurs' voice and the way they describe their business because they're thinking about it completely differently than someone who's just trying to flip a business over the next 5 years.
Yeah, that makes a lot of sense. You think completely differently when you're thinking so far ahead. Are you up for sharing what you think your secret is?
So, our secret is relationship building
Mhm.
from someone outside looking into investment banking and looking into the tech world. I've just noticed that these companies have become more transactional. And, Hewlett Packard, birthplace of Silicon Valley, the HP way is all about running a relationship focused business. Because if you're going to accomplish big things and make big breakthroughs, you need to work strong with your team because it takes a village to make these things happen. And Silicon Valley was birthed on that. And, Steve Jobs had an internship at Hewlett Packard. Steve Wozniak worked at Hewlett Packard. Apple was very much a relationship focused company when they first started. So was all these other incredible companies. But over time, these companies get bigger and bigger, and pretty soon they're 20,000 people, 30,000 people, 50,000 people, and you don't remember everyone's name anymore, and you don't know everyone's birthday, and you just lose that touch of a company where everyone knows everyone. And it's important for companies to keep their culture. Otherwise, they start incurring a lot of costs from, people leaving, and then you have higher training costs, and it just goes on and on and on. So I really do believe our edge in investment banking is being relationship focused. And that's how we've been able to win some of these deals away from some of these top banks around the world. And then I also think our events are going to give us an unfair advantage because we do better events than other people because we're focused on success fees. And because of that, it creates events where the quality is extraordinarily high and very successful people want to be around other very successful people. And we create an environment for them to do that. And we got to turn a lot of people away. But in order to do a curated event, you can't let everybody in. And that's why it takes us so long to do our events. You know, some people are telling us to do an event every month, and it just doesn't work like that. Sorry. If we had a bigger team, maybe, but there's also just not that many people in the world that fit the quality level that we're looking for. So even if we were to do an event every month, it's hard to have people flying in every single month. So I'm happy to just do our small events on a monthly basis where they're really, really small so that we get to spend quality time with, you know, prospects, with introductions from other people, and just let them know what we're doing. And then
It's
we get to
very interesting. The small amount of time that I've spent with you, they don't sound like small events, they sound like very specific events. Your life is very specific. It's like, that is the major lever. Let's just pull on that one, flag the other dozen, and let's just do that one lever, and it's very specific, and I really like how your model of the world works, where your focus goes, and how you I'd be so interested in how you what model you're using to go, "That's the right lever. That's the one with the biggest upside, the least downside." Because it sounds like and I realize, yeah, you've had your lessons in life and your experiences for sure, and they would have added to your quality and level of skill set now. But it's really interesting to see how you played that out across everything that you do. I love it. It's really interesting, and I think it's something so valuable that other men could take out of that. I think it's so important that in a world where we try to do so many things, play different sports, do different things in our business, wear all the different hats. So just get really specific and narrow down and be like, that's the thing that we're going to focus on. Yes, there are 30 other things we need to get done and they are on the list, but this is the big thing right now. And you've taken that to a whole another level of success, and I really enjoy it. And it sounds like it's allowing you to keep that edge and that secret of keeping relationships really strong, which is awesome. I think it's awesome.
thank you.
What is it? I guess what's the thing that you're most excited about for you for the next move or the next thing or the thing that you're currently working on?
I mean, I just love what we do. So I kind of just love it all. We get to work with the best entrepreneurs on their largest financial transactions. It's fun and it's fun to talk about. You know, we do got to talk to people that aren't a good fit, but we try to point them in the right direction. But other than that, when we find the right founder and the right team, it's just a great partnership where we make a big impact in their life. They get to focus on their business while we can focus on the corporate development work. And again, really help some of the best entrepreneurs on the planet with their largest transactions. And I think, you know, teaching other people where to focus is also very rewarding. Like I said, a lot of people follow for the small deal trap. So I've met, 40-year-old men, 50-year-old men that I've told this to, and they're like, yeah, I don't know why I didn't think about that when I was 20 years younger. And it's because no one talks about it. And most people, when they hear about these other deals, they go, oh my God, $50 million. And then you're trapped because you think, oh yeah, this $50 million deal is huge. I got to focus on this. And the world goes round and round, and they're focused on $50 million deals. They become experts at $50 million deals. They do a great job. They make a great living. And then they run into me and they go, oh, wait a minute. If I just shifted my mindset and said, we only work with minimum $50 million deals, but we'll do $1 billion deals too. You only need to get $1 billion deal to equal 2050. So people can slice and dice it any way they want, but we like to work on big institutional deals and not get caught up in a lot of these smaller deals. And one of it is because of the opportunity cost. We want to be spending our time where it's best valued. And also because they're better entrepreneurs. Entrepreneurs that are working on $1 billion debt deal are just stronger entrepreneurs than entrepreneurs that are raising $10 million or $5 million.
Makes
And
sense.
it's nothing to say, negatively about them, but these entrepreneurs are just further along in their journey. And I love working in that space because you're surrounding yourself with success. A lot of people, they love startups, but now they're surrounded with a bunch of companies that are going to fail over the next 18 months. And instead of your work compounding over time, all your work that was in that startup just went to zero. Oh, another one. All those introductions, all the strategy, all the thinking, all that work into that startup, that just went to zero.
It sounds
Now you're
exhaustive.
working with another startup. Oh, you tried to help them raise capital, didn't work. Okay, that's a zero. And you're just in this cycle of falling for small deals. And again, you can make a great living doing it. I'm not trying to knock it. I just think that if we're all spending the same amount of time, you should set yourself up so that you're spending the least amount of time to make the most amount of money. And if you're working on $1 million deals, you should try to start working on $100 million deals. If you're working on $100 million deals, you should be working on $1 billion deals. And if you're working on $1 billion deals, you should be trying to do $10 billion deals. In finance, the levels are crystal clear. Someone said that the levels at Morgan Stanley were ambiguous. I was like, I don't understand that at all. It's down to the penny clear. And people need to understand how these things work and take enough shots on goal so that they can do one of these larger deals. And then it's just a velocity of capital question. Okay, you got $1 billion deal done. How quickly can you do the next one?
That's awesome. Thanks so much, Ryan. Is there anything in your life or any piece of advice that you've found really beneficial to you or the people you've worked with that you'd love to share with the listeners?
I mean, focus on risk is the philosophy. I use it in finance and in life and at work, pretty much on everything. So I would just point people to think about different types of risks. It's not just stock market risk and interest rate risk. there's relationship risk and opportunity risk. So there's a lot of things that people should be thinking about. And I can tell you right now, at the highest level, that's all they talk about is different types of risk. And a lot of times it's risk that will absolutely never happen. But if you are talking about those types of risks, it gives you better perspective to just understand risk. We got a Facebook group on Facebook called Focus on
Awesome.
Risk. We talk about stocks and alternative assets on there all the time. We host events in Silicon Valley pretty much every month. You can always catch us and chat with us if you're in the area.
I'll put those links in the show notes then as well. I'll grab them off you. That'll be perfect.
Yeah, and we're always, looking to help people that are immigrants that come to Silicon Valley or people from other states that are here. We like to plug them into communities so that they can have a soft landing when they get to Silicon Valley and really try to help people reach their business objectives and have them not focus on partying and focus on building. And they'll look back in 10 years and feel really good about what they did. They just party for 10 years, then you got to go home and be the Silicon Valley expert from where you grew up. That's it.
Just on this Oh, that's brilliant. What a story that would be. Oh, Ryan, I'm beyond grateful for your time. Thank you so much for sharing all your gifts, your experience, and your stories. I really appreciate it. Thank you.
Thank you for having me. I appreciate the time.